All right, well, let's welcome everybody. We are going to let folks join on to the webinar, give them just a few seconds here, and then we'll get started. All right, welcome everybody to today's market update. I'm Greg Patterson, and I'm joined with my teammates J.A. Kennedy, Tara Gould, and Jenn Mann, and we are with Atlantic Wealth Management here in Morehead City. This is our second quarter 2025 market and economic update, and we are glad that you've joined us today. Each quarter we strive to bring you the latest on markets, the economy, and our thoughts about where we are headed. We hope these virtual meetings are valuable for you and your loved ones. And should you have questions or feedback, please email that to Mackenzie here at our office, and that is MACKENZIE at myatlanticwealthmanagement.com, or you can always call us at the office here, 252-515-7800. We appreciate your questions and always welcome those. And lastly, we host these calls quarterly, with our next one scheduled for Monday, July 28th at 4 o'clock in the afternoon. And we invite you to forward the invitation to friends and family and those that you think may benefit from these updates. Also, just to let you know, we'll post these to our website once we get compliance approval to allow clients to view on demand, as well as share this content with their friends. And we ask you to do so as it helps us reach others who may find this information beneficial. With that said, that's a mouthful, isn't it? We have a lot to cover this afternoon, so let's get started with our agenda. Let's take a quick peek at that. And today we do have a special guest speaker, Tommy Bennett. We'll introduce him in just a minute. We're going to go over current market returns and give you some perspective on where markets have been. We're going to talk through the volatility, of course, in the wake of the tariffs. We'll talk about recognizing the noise and give you some perspective on where we are related to tariffs. Also, the broadening of the market away from MAG 7, the 2025 economic outlook, to give you some updates on the economic data that we cover. We're going to talk through actionable items, what you should be doing now, and give you our thoughts and conclusions as we close up. It's a lot to do today, but we're going to get started with our special guest speaker, Mr. Tommy Bennett. He's here on behalf of the Big Rock Blue Marlin Tournament, where he serves as a longtime board member and chair of the Charities Committee. I've known Tommy for many years, and I know that anything he involves himself with has a successful outcome. And he's been a longtime board member here with Big Rock Blue Marlin Tournament in our community. He's fortunate that he was born here and grew up here and knows this area very well. Tommy is also one of our trusted advisors to many of our clients who we send to him for insurance. He is an owner with the Insurance Center, headquartered in New Bern, North Carolina, and his office is actually, lucky him, he's on the Atlantic Beach Causeway. So whether it be personal, dealing with your homeowners, wind and hail, auto, anything like that, or commercial lines, Tommy is the one to see over there and would be great to talk with. So Tommy, with that, thanks for coming on today, and we appreciate you being here. The 66th Big Rock Blue Marlin Tournament is just a few weeks away, June 5th, I believe, and just such a big event here. Can you tell us from your perspective how things sit and give us an update on the impact to our area?
Yeah, sure, Greg. Thank you for those kind words. First of all, I'm happy to be with you today. We've known each other for quite some time, and I'm one of your clients as well. So we'll throw that out there in an effort of full disclosure. And I enjoy working with your entire team. But yes, the Big Rock Tournament is right around the corner. We had a board meeting on Friday. It was a little shorter than you might imagine. That means things are going very well. Typically in those meetings, we get a report from the tournament directors. Sponsorship sales are going great. New t-shirts have arrived, and more pallets of t-shirts are arriving daily. I said pallets of t-shirts. A lot of stuff is coming in. The tournament, guys, has just turned into one of those very special events here in Morehead City and Carteret County. The 300 plus teams of 6 or 8 fishermen are coming, but more importantly, they bring their families, their children come with them. They come from all over the East Coast and headquarter themselves in Carteret County, or at least, our little slice of the beach from, say, Emerald Isle to maybe Cape Hatteras for 10 or 12 days. And the impact that they have on our community is enormous. Obviously, you think about the financial impact. We don't really have any numbers, but what I tell people is try to get a reservation at a restaurant in Beaufort during the week of the Big Rock tournament. You can't do it. So I think there's some obvious economic impact. Maybe the hidden impact, though, Greg, is all these people are coming from the sport fishing world, and their eyes are focused on Morehead City for 7 or 8 days. Oop, hold on just one second. I got some kind of Zoom screen. But the sport fishing world is focused on Morehead City. And when I say the sport fishing world, I'm talking about Australia, New Zealand, the Bahamas, Costa Rica, Guatemala, the Azores, all over the world, people are paying attention to Morehead City. And then you throw in the tens of thousands of t-shirts that are sold every year, and every one of them says Morehead City, North Carolina on the back of it. The publicity, the PR, it's just something that cannot be measured. But it is, you come down there on a busy day when there's a boat weighing in a blue marlin, and there are thousands of people there, and they'll stay there all afternoon and just lap it up. The interaction we have with them, some of the fans, some of the patrons, is just incredible. They have it on their calendar. They come year after year. They want us to see them, and they want to see us. I mean, it's really a remarkable thing. And our crowd has done a great job.
Where does this rank in terms of billfish tournaments around the country or the world?
Yeah, this is the largest blue marlin tournament in the world by far. There is one tournament in Ocean City, Maryland, but it is a white marlin tournament. They have a bigger purse than we do, believe it or not, and more participants, but their focus is on catching a white marlin. We are the second oldest major tournament in the world, surpassed only by the Club Nautico tournament in San Juan, Puerto Rico. They are a year older than we are.
Wow.
So it's just quite an event, and something I think, I think the town looks forward to it. The parking is a little bit of an issue during the week of the tournament, but at the end of the day, the businesses thrive. I think the town thrives. The real estate business, the PR that you get from it, it's just a home run across the board, I think, for Morehead City, Beaufort, Atlantic Beach, and really all of Carteret County.
Well, and it extends for much of Eastern North Carolina, even thinking about the charitable impact of the tournament. And I don't know that everybody knows. I mean, the purse is a big number, 7.5 million, but I mean, our viewers might not know the charitable impact with the Big Rock being the largest charitable or philanthropic organization out there, right?
Yeah, we are. I feel like saying that we are the largest philanthropic organization in the county is not an exaggeration. We've given away $1 million, $1.5 million, $1.7 million in the last 3 years. Most of that money stays right here in Carteret County. I think one of the other things that people don't really realize is that, the theme of the tournament for years was for the love of special children. And children have always been just a huge motivator for the charitable side of the tournament. We give away a lot of money to help children in this county, whether it be to, we've got a fantastic educational system in Carter County. Our school system is top flight, but the money that we give takes something that's really good and makes it the best. And that's a goal that we kind of have in mind when we receive an application and make a grant reward to someone. But certainly, I think you'll see the theme is children a lot. We are a little different, Greg, in that the money that we give is typically for brick and mortar type projects. We really don't pay the electric bill or help you hire another staff member. But if you need a copier, if you need a playground, if you need a new kitchen in your, at the Ramsey Center, the old Easter building in Harkers Island, it's kind of like the Boys and Girls Club of Harkers Island. I mean, we've helped them immensely. They do a great job for a lot of kids down east. All the bands, Wanda and I were at a band performance at Croatan High School earlier in the fall. And I looked at her and I said, Wanda, every uniform on that field was paid for by the Big Rock tournament. Every one of them. Wow. So, I mean, we bought uniforms for all the bands in town. It's just that, I think it's that kind of stuff that just helps somebody go from this X level of excellence to that just superior, you can't beat us level. And when you walk in our office, there's a floor mat on the ground and it says Big Rock Tournament Charity First. And that's really what the tournament is about at the end of the day. Yes, it's a great event, but it is a powerful fundraising tool for a lot of worthwhile charities here in Carteret County and Eastern North Carolina.
Well, I appreciate your involvement in that and your leadership. I know that matches what you care about, and it's been evident in the tournament too. So thank you for that. As you look into the future, what has excited you, or what do you get excited about when you think about Big Rock, not just this year, but years to come?
Yeah, we have a kind of a loose vision that's based on the Phoenix Open in the Waste Management Open in Phoenix, Arizona, where you have these stadiums and luxury boxes and people coming and watching your event while it happens. Maybe a combination of that PGA Tour kind of thing, or Live Golf. We've kind of gotten there a little bit last year. Just a professional production on shore, and kind of the bass tournament circuit. I don't know if you've ever watched some of those guys come in and weigh in a bass in a basketball arena with 30,000 people screaming. That's kind of, maybe that's where we want to go if we can get there. And we think about it all the time, but one thing that I can say to answer that question, Greg, is we are always trying to do something better. And we are not afraid to make a change, to do something that you might think is the craziest thing in the world, but our fans, our patrons absolutely love it. Big Rock TV was one of those examples. You used to be able to watch on a little screen that would give you a picture every 10 seconds. Now it's a full-on live television production with music in the background, and we've got a huge stage with a large video board. I mean, it's just, it's a production, and it's a lot of fun. But we're just making it more available to the people that want to watch it wherever they are. And I apologize for those of you that are listening that have employees. that listen to Randy Ramsey on the radio while they're at work, or me on the TV in the afternoon, but it's just one of the hazards of doing business here in North Carolina.
Yeah.
And millions of people listen to Randy Ramsey on the radio during the week of the tournament.
Yeah.
My viewership is not quite as big as Randy's. Millions of people listen to Randy while they're at work, I can assure you.
You know, I've talked to you about my idea of live streaming the hookups. You know, if you got all that space in the transom of the boat that you could sell advertising to and get a link up to Starlink, and people on their cell phones in Omaha, Nebraska could watch a fish fight in real live time. Well, we tried that a little bit last year, and we have the capability to do that now with Starlink. And I would say to you that is another thing that we are thinking about. There's one little bit of a problem there, is that if you've got 5 or 6 guys on the boat and you're trying to catch a blue marlin that's worth $1.8 million, it's kind of hard to get that one guy to stand there with his camera and do nothing but film it for you. He's probably got another job. We have talked with a captain, like right after he landed a blue marlin. That's very exciting to see that. The technology has just not gotten to the point where we can do it directly on our Big Rock TV broadcast. It's generally done through Facebook or some other social media platform right now, but we're getting there. It's definitely something that we're thinking about. Good. So the dates of the tournament, by the way, June 5th. It's that whole week, right? Starting June 5th. Yeah. And I don't have June 5th is a Thursday. Yeah. So registration, we've already got 12 boats registered, for example. June 5th is a huge registration day. June 6th goes into the ladies tournament, registration for the ladies tournament. And then they fish on Saturday, June the 7th. The June the 8th is kind of a recuperation day. Everybody just it's a low key day, a lot of registration going on. And then the Big Rock tournament itself will start the first fishing day on June the 9th and last for 6 straight days. And then I'm looking at my calendar, on Sunday, June the 15th, on Father's Day, we have a big awards party under our new big tent on the Morehead City waterfront. So it's, it's 8 or 9 or 10 days of intense work for the Big Rock staff that culminates in just a wonderful awards party on that Sunday morning. Well, that's going to be great. Yeah. Well, we appreciate your involvement, and thanks for coming on today and sharing just a quick update. Happy to be here. Thank you again for the invitation. Excellent. It's easy to come and talk about something that you really like. I can tell.
Absolutely, we agree. Yep.
Well, thank you very much, Tommy. Hope you have a good rest of your day.
Yep, I'm gonna hang around for a little bit. I'm interested in tariffs and volatility for a little while.
Okay, yeah, that's good.
With that, that's a good segue, Tara.
Good job. Yeah,
take over
I appreciate that.
Sharing a little bit about market updates.
That was not planned, by the way. That was very good. So what we're going to go through now is just a couple snapshots of returns. We're going to stick with U.S. stock indexes, S&P 500, the Dow, and the NASDAQ, and look at year-to-date as well as a little bit longer range. So first up, we have S&P 500 year-to-date. Just a little reminder, the S&P 500 is 500 of the largest publicly traded companies, of course, in the United States. This does serve as just a broad indicator of the overall market and economy. So if we go and look at the beginning of this chart, and this is year to date, so the opening date was January 2nd. We were approximately about 5,800 points. And the closing value of last Friday, so this was close of market as of Friday, April 25th, we were at 5,525.21. So that year-to-date change is a decline of about 4.7%. So during this time, year to date, January through now, the high was a little over 6,100 that happened mid-February. And then the low dropped down to about 5,000 points in early April during some volatile times, which we'll talk about a little bit later. And then we have the 5-year, so always want to provide some perspective. So in 2020, so April 25th, 2020, that was 5 years ago, if you can imagine that, S&P 500 was around 2,900 points. And of course, we talked about the current value over 5,500. So if we're looking at a cumulative return, that's over 95% during that period of time. We know that S&P 500 has significant growth over those years, despite all the things that have gone on since 2020. All right, next up, we have the Russell 2000. So we're just looking at the basically remainder of the market. And so you can see as of Friday, April 25th, around 1,957. So that puts us year to date down a little over 12%. And then again, taking a step back, looking at a 5-year return, this always looks better. We're at 1,957 as of Friday. You can see where we started in 2020. So we were down below 1,500. We had some peaks in right before 2022. And so that puts us at a cumulative return over 5 years of a little over 55%. And then lastly, let's look at the NASDAQ year to date. So as of Friday, April 25th, we're a little over 17,000. Just to provide a little bit of perspective, we started the year around 19,000. So that puts us at a decline of a little over 9%. So throughout this time, we did have a peak in February, a little over 20,000, around that same time that I was talking about S&P 500. And then lastly, for the 5-year, this is kind of wild to me. So we started in 2020 at approximately 8,000 points on the NASDAQ, and you can see where we sit today, over 17,000. That's a cumulative return, a cumulative increase of 117%.
Thank you, Tara.
Of course.
All right, so volatility. Volatility, to the extent that we've seen it thus far this year, it can definitely be unnerving. And the natural reaction to this sort of volatility is, of course, to want to eliminate it. And the most obvious perceived way of doing so is to cut one's losses and pull out of the market completely. But history has shown us that more often than not, the markets will rebound from significant dips and end up posting long-term gains. Given this, it's very possible that pulling out of the market when it's experiencing this sort of downward pressure or any kind of downward pressure can result in one's missing the eventual rebound when it happens. And we don't want that to happen. And so we like this chart a lot. We thought this chart was a great way to illustrate this point. So the chart shows us the performance of the S&P 500 from 1980 through 2024. There's a little bit of 2025 first quarter tacked on to the end. But here we can see the intra-year S&P 500 declines, which are the red dots, in addition to each year's annual return, which are the gray bars. So if we look at this 45-year period from 1980 until 2024, we can make a few observations. First, obviously, there are intra-year drops every year. Second, in 25 of those 45 years, the intra-year drops were in double-digit territory, with the average being a drop of 14.1%. And finally, in 34 of the 45 years, the annual returns ended up being positive, with the average annual return being 10.6%. And so what this tells us is that more often than not, recoveries have followed declines, and investors that have stayed invested, that have stayed the course for the long term, have benefited from the recovery and from staying the course.
Jen, that's impressive to take a look at that over 45 years.
It
And
is.
to note that there's been an intra-year sell-off or low, even, and that's every year, right?
Right.
It's good info. That's, of course, not a diversified portfolio. It's just the S&P 500, but a powerful indicator of what might be to come, right?
Yep.
All right, you guys, at least those on the team here know that I'm no fan of flying. In this slide of humor for you, the pilot has indicated we are going to experience a little turbulence. Please fasten your seatbelts. When Greg is flying on the plane, this happens more often than not. And of course, you can see the person on the aisle seat screams, "We're going to die." And the woman beside that person says he's a financial reporter. Now, do not miss the guy in the lower left-hand corner. He is the one, I think, that is living his best life. He's got his Bose noise-canceling headphones on, and he's really just enjoying the ride, turbulence or no turbulence. So there's more to this story than just the financial reporter giving you the scary news when it's just regular turbulence. But trust me, I keep my seatbelt fastened, and you should too. So let's digress a little bit and talk about tariffs and the market. I hope everyone can see this slide because it's impactful in a number of ways. First of all, it's a history lesson. During Trump's first term, he implemented a swift tariff policy that went beginning in 2018 with tariffs implemented in January on solar panels and washing machines. It quickly spread to a broad-based tariff on steel and aluminum. You guys remember that?
It's a long time ago.
It was a long time ago, but that quickly went to the exemptions on the European Union and Canada and Mexico coming off. And then by July of 2018, there was a start of a trade war with China when they struck back. And of course, the markets declined later that year, all the way to a negative 4.4%, even in spite of good economic growth that year. And then we came out in 2019 up 31%. This is in spite of tariffs still on Canada and Mexico. All those were lifted in May. And then in August of 2019, the US announced tariffs on almost all of the remaining Chinese imports. So good grief, we've got a history lesson here of how the policy and the administration impacted or was impacted during that time period. Now, history sometimes repeats itself, and we can often see that it rhymes. And I'm not suggesting that this is deja vu, but it could be, couldn't it? We know that volatility is really impacted much more so from uncertainties around the policy than it is on tariffs themselves. However, you guys have shared with us, our clients have anyway, that this time could be different, and we don't know what we're talking about. But ultimately, I would tell you the US stock market has proven to be remarkably resilient over time, focusing on time-tested investment principles such as diversification and staying invested, even in spite of the volatility. I know it's hard to do that, but we know time and time again that the market does recover, and we go on to see better days. So that is a little bit about tariffs in the market. And I think the consensus when I read from economists today is that the policy around tariffs today is very similar to what it was in 2018 and 19. And that is that it is used as a negotiating tool or tactic to bring about a fair and equitable trade solution across the world, rather than a long-term type of situation. Again, this is evolving and we're paying close attention to it, but that's what our thought is right now. Tara, can you bring us up to speed on the broadening of the markets and the economy as it relates to the Mag 7?
Sure. So this slide is just going to highlight some of the stock market dynamics. So we're talking about the Magnificent Seven. So pop quiz, who is in the Mag 7. So these are going to be the major tech giants. We got Apple, Microsoft, Alphabet, better known as Google, Amazon, Meta, aka Facebook, Nvidia, and Tesla. The reason we're talking about these is these companies have been the driving force behind market performance over the past few years. And so two parts we're going to take a look at. First part is cumulative return. So we're looking 2023 through Q1 2025. And then also when Greg's talking about broadening, we want to look at earnings expectations compared to the rest of the market. So when you're looking at your screen, the first chart you're going to notice on the left is the Mag 7 delivered just amazing returns. And this is from 2023 through the end of Q1 2025. So we're looking at a cumulative return of about 270% compared to the other remaining 493 companies in the S&P 500, returning close to 40%. So we can see there's a big disparity there. Great returns on both. And then if we move over a little bit and we're looking at year to date, so January through basically to now, we're almost at the end of the first quarter. You can see that the MAG is down about 15% compared to the other 493 companies, which is down about 0.3%. So they're leading the way on the upside, and they've been leading the way on the downside. And so when we look at that, we transition into earnings, we're seeing things start to, we call it normalize. And so in 2023, the Mag 7 earnings grew about 24.8%. The rest of the market actually saw a decline. Now we move to 2024. So we see that gap widening just a little bit more, 36.8% for the Mag 7. And then we saw other remaining companies in the S&P 500 at 4%. But now in 2025, the expectation on earnings is expected to narrow and narrow significantly. So forward expectation on earnings for the Mag 7 is around 15%. The remaining companies in the S&P 500 are expected to grow at 8%. So what does this tell us? This tells us that the Mag 7 likely is not going to dominate forever. We have to be careful about over concentration. That risk is real. You want to be aware of that in your portfolios. We do expect the market to broaden, and diversify. So companies that are outside of these Mag 7 and big tech, we're expecting strong growth from those companies. And portfolios need to adapt as we see this going forward. So this is something that we're monitoring and want you to be aware of.
Thanks, Tara. That is important to consider and be aware of for sure. And we've done that. I'll touch on that just in a minute. But good afternoon, everybody. With these webinars, we always like to give kind of a brief economic update. And so I know you guys have been sitting on the edges of your seat waiting for this afternoon, this part of our presentation. But in all seriousness, I'm going to give just a brief snapshot. I do think that the story on the outlook kind of remains to be seen in large part based on these outstanding trade negotiations to take place over the next couple months. So, but just to give you a brief rundown, I'll just go in order, starting at the top there with consumer spending. If we look at the latest retail sales numbers, we are up from a year ago, just a little bit under 5%. So spending about 5% more. That's over and above the rate of inflation. And we would put a check mark by that as being positive. On the employment front, we've continued to see job gains, number of jobs being positive each month. And the initial jobless claims number each week has kind of remained consistent. So the unemployment rate ticked up slightly from 4.1% to 4.2% in the latest monthly report, but that's still at a reasonable level and nothing to be alarmed at this point. Personal income, this has also grown in tandem with consumer spending, so it's about the same number actually, the increase on personal income year over year and consumer spending. So consumers are earning more as a whole, and they're spending that in the economy as well. And then manufacturing, industrial production has kind of been up and down on a month-to-month basis, but it is positive if we look over the last 3 months and 6 months, and especially over the last year to date, if we compare things to a year ago. On the housing front, new home sales are up, existing home sales are down. So this has been a continuing ongoing theme since interest rates have gone up. Folks in their existing homes have been less likely to sell because they're locked into lower rate mortgages. The growth that we've seen has been in new home sales. And the market has adjusted as prices have gone up. We've seen average home size go down a little bit, prices come down to try to accommodate the increasing housing market. And then finally, GDP, which is just a measure of economic growth, the total dollar value of goods and services produced within the US economy. The estimates on this for the first quarter have kind of been across the board. We will have that number come out Wednesday morning. We've seen everything from negative to in excess of 2% annualized. I think the general consensus is that we will have a little bit slower growing economy, or we have had for the first quarter, but positive. And we'll see how that tracks over the remainder of the year. Projections are still for us to have a positive GDP annualized for the year, but just a little bit smaller number for the first quarter. And then we put inflation in the middle of this chart because it continues to be a big area of focus, and we feel like a big determinant on how things track going forward. This has been positive of late over the last couple of months. Inflation has ticked down. We were approaching 3% on the consumer price index, which measures inflation. That has dropped down to 2.4% was the latest reading. So the caveat behind all of this is that there are outstanding negotiations to be made on the trade front, which could impact things. But the snapshot as things stand today, it's a pretty decent snapshot in terms of the economy. And we'll see how things play out. Any comments on that? Any of you guys?
Yeah, I think inflation does bode into the picture. I'm glad you brought that up.
Yeah. Speaking of how things play out, I did just want to take just a minute, and the print is kind of small on this page, but we have had quite a month. If we go back to April 2nd, when the tariff announcement came out, in terms of the market, and this is measured by the S&P 500, significant down days followed by some significant up days, which we tend to see in the market over time. But just to highlight a few of these things, the announcement was on April 2nd on a Wednesday, after Thursday and Friday being significantly down days. We capped off the week with the third worst 2-day decline in the S&P 500 since Black Monday. So pretty significant couple of days in the market. Fast forward just a few days later, that following Wednesday, we had futures down another 1,000 points. Then we had an announcement on a suspension on tariffs, and we saw the S&P go up 10% for the day, the NASDAQ up 12% for the day. The Dow was up 2,700 points on the day. So, and then following from there, we had a couple down days. Market then rallied. So we've continued to see, this ups and downs, but particularly the first part of April. Interestingly, I did go back to look and see, what is the S&P 500 overall return or loss, for the last month. Tara gave us numbers from year to date and 5-year. And I've already shared this with the team, so I won't ask them the question, but think about what would you think is the return over the last month based on all the news headlines, all that we've watched out there. And I'll give you the answer. The answer is right around 1% decline. So if you've been reading news headlines and watching the news, you probably are thinking that it feels like it's a lot more than that. But even with these ups and downs, and it speaks to some of the things that we've already mentioned about staying the course. You would not have wanted to sell out on, April the 4th and miss the 10% up day in the S&P on that following Wednesday. So just wanted to highlight that, and that kind of brings us into these key takeaways in light of where we are. And a lot of these things are, as Greg mentioned, just time-tested principles on investing and financial planning. So just wanted to touch on each of these briefly, and feel free, guys, to chime in if there's anything to add. But first of all, just reviewing cash position. That is always important, but we definitely want to be aware of upcoming expenses, be it trips or vehicle purchases or just needing additional income. We want to plan around those things and set aside cash in advance. We also want to look and make sure that the cash that you do have is placed in an account where it can maximize return on it. So your emergency fund, you want to make sure it's in a money market or a high yield savings account. Those rates are still much higher than they were a couple of years ago. So we always talk with clients about making sure that we're maximizing our interest on those accounts. The second bullet point there is recognize the noise. We've already talked about this a little bit, but if you just read the headlines or the news stories of the day, negative news sells, and I think that we're able to see that play out over and over again. So it's oftentimes good to turn off the TV and to not watch the ticker tape go by on a day-to-day basis. Focus on those things that are important to you and have confidence in the fact that you've got a plan in place that is a long-term plan, and it's not dependent on the day-to-day movement of the market. The third bullet point there, think opportunity. We've had this come up in meetings with clients, and a story that we've shared across the team here is just an older widow client that was a recent meeting with. She came in disappointed, but she wasn't disappointed about the markets being down. She was disappointed about not having cash to invest. So we don't get these opportunities often, but when the market does experience volatility, when we have corrections and pullbacks and those things, then it is a great time. If you do have cash to invest, it's a great time to pull the trigger on that. So thinking about the opportunity in that. Then maintaining the long-term outlook. We've touched on this as well, but in the short term, from the day to day, the market is going to react to the news of the day. over the long term, we've seen over and over again that the market goes up and down, but it goes up more than it goes down. And those that have benefited from being investors over market and economic cycles can speak to that. And we hear that over and over again from our clients that have been long-term investors and have stayed the course and have seen the benefits and reaped the rewards of that. So maintaining the long-term outlook.
Jay, it's also important to recognize that's not just for someone in their 50s or 60s, but I think there's a strong case to be made for somebody in their 80s to still own equities, especially in light of the inflationary backdrop. Equities and real estate are the only assets that are going to give you rising income as well as growth of capital. So, you know, we've had the client that says, I don't even buy green bananas anymore, Greg. You know, well, we all chuckle and we laugh about that, but I don't know how long you're going to live, but I believe there's a case to be made for always having an allocation at some degree with equities involved in it.
Agreed. And that's where it comes back to, you know, when folks retire, the largest piece of their accumulated investment net worth or wealth tied up in their investments is still what we would call for the long term, you know. So we want to plan around those shorter to intermediate term needs, be it income or specific items and cash needs. But keep in mind that, yes, we do need to grow funds because things will cost a lot more 10 years, 15, 20 years from now.
You got it, yeah.
The next to the last point there is just emotional versus strategic changes. We don't want to react emotionally. I already mentioned, you know, if you'd have sold out after the worst 2 days or the third worst 2 days since Black Monday, then you would have missed one of the best days in the market. And that tends to happen. We see the best days in the market very close aligned to the worst days in the market. So we don't want to react emotionally. The contrast to that is being strategic. And so that's our approach here. We did, across our portfolios, rebalance just before the beginning of April. So just before the tariff announcement, we rebalanced client portfolios to bring back in line our risk targets, as well as we made some reallocations based on expectations on interest rates. Tara mentioned about the broadening of the equity market. So keeping that in mind, that impacted our rebalance actions as well. So we want to continue to be strategic and not emotional. And then just revisiting risk tolerance. So there are times where risk tolerance changes. And so we want to stay in communication on that. If you are not able to sleep at night because the ups and downs of the market, we want to have a conversation with you and talk about that. But also keep in mind, as we already mentioned, that there is a place for being an investor to combat inflation over time. Anything to add on those points, guys?
A lot of this is done proactively
Yeah.
by sitting down in front of you at regularly scheduled meetings, but it also could happen reactive. So for listeners or viewers that have something change in their life, we're certainly welcome to call us, and we'll sit down with you and review over your situation.
Yeah, I think if concerns extend beyond just yourself, but if you're having conversations with other folks that are concerned, we'd love the opportunity to sit down with them as well, have a conversation to talk through these things. And that brings us to, we always close these webinars with some biblical wisdom and truth from God's word. And these couple verses or passages may sound familiar, but they're worth us revisiting again. I did add the verse 7 into this first passage. We didn't have that in the first time we looked at it, but I'll read it here briefly. Let your reasonableness be known to everyone. the Lord is at hand. Do not be anxious about anything, but in everything by prayer and supplication with thanksgiving, let your requests be made known to God. And the peace of God, which surpasses all understanding, will guard your hearts and your minds in Christ Jesus. And so, we can choose to focus on negatives and uncertainties and things, or we can be focused on those blessings in our lives, those things that we've been provided, and we can present our desires, our requests to our Heavenly Father, and pass them on to Him, and not be anxious about the future, tomorrow, a year from now. And that is where we get the peace of God that does surpass all understanding. That's from Philippians, and then kind of a related passage in 1 Peter 5:6-7. Humble yourselves, therefore, under the mighty hand of God, so that at the proper time He may exalt you, casting all your anxieties on Him, because He cares for you. And so that peace that comes from Him does start with us humbling ourselves and coming before Him and saying, hey, I'm casting these anxieties onto you, who is over all things, who is Lord of all. And so we each of us on the team here do that on a daily basis. And so would pray that you guys can experience that peace that comes and that surpasses all understanding. It comes from Jesus and only Him. So wanted to share that and close with that, and I'm going to pass it off to Greg for last comments.
Yeah, so thanks again, Tommy, for joining us today, and I appreciate you making time to share about the Big Rock. And for those who are watching and listening to us, thank you for joining in. We will post this to our website once we get compliance approval. Usually it's about a week or so. And so if there were parts that you missed and you want to tune back in, feel free to do so. Also, you can feel free to forward this to those who you think may benefit from the work that we do. That's generally how we get new opportunities and new clients. And then lastly, if there's anything that you heard today or saw that you wanted to dig into deeper, let us know, and we'll be glad to make a time to talk with you. And look forward to helping you and those you care about. And other than that, go enjoy the beautiful day here on the Crystal Coast. If you're tuning in and you're not here on the Crystal Coast, you need to be here. Get yourself and retire down to the coast and enjoy it. So hope you all have a great day and enjoy it. We'll see you around at our next meeting. Bye-bye.
Bye.